We'll be going over IRS Form 8233, Exemption from Withholding on Compensation for Independent and Certain Dependent Personal Services of a Non-Resident Alien Individual. So basically, this tax form is used by workers who are not non-resident aliens within the United States who are residents of a different country claiming a tax benefit under the tax treaty between that country and the United States. So a couple of considerations here. First, you should make sure that this is the correct tax form to use. So and I'll get to that in just a moment. And then second is making sure that you are familiar with the terms of the tax treaty that you are using to cite. So some of this is outside the scope of this video. In this video, we're going to touch base on a couple of these concepts and definitions, but we're going to focus mostly on completing the form itself and then what happens once you've completed the form. So there are a couple of key terms here. First would be the beneficial owner. You'll see this term here used quite often. The beneficial owner is the person that's actually receiving the income. So if you're performing services as an independent contractor, you would be the beneficial income or owner. If you're under certain circumstances, if you're a dependent or performing dependent personal services, in other words, you're an employee of a taxpayer, whether it's a company, whether it's some other organization, then you could also use this form. But the term beneficial owner applies to both employees and independent contractors. So you'll see some of these concepts come up over and over. Another term that you should be familiar with is withholding agent. That simply means your employer or the person that's acting as your pay provider. So your employer, your payroll processor, whoever is actually processing the payments for your income. So the bottom line is, if you don't complete this and you're a foreign individual, then there are certain rules that the withholding agent has to use. Basically, there's a default, I believe it's 30% withholding requirement for most compensation under these circumstances. So you should use this form if you are if you are able to claim a tax treaty benefit that is a withholding exemption. So either independent personal services, business profits, again, that's the independent personal services, or as an employee for dependent personal services. There's also a stipulation that if you're, for a lot of students, teachers, things of that nature, if you're receiving scholarship and fellowship income, that's not compensatory, so you don't have to earn this to receive the income, but you are also receiving personal services income from the same withholding agent. And again, probably the most common example would be someone who's a graduate student who might be here on a scholarship or a fellowship, but is also earning a little money on the side as, a teaching assistant. So if you have a tax treaty that has an exemption for part or all of both types of income, you would use this form. You don't use this form if you're an employee who is not claiming a tax treaty exemption. You would simply use your Form W-4. There are specific instructions within these form instructions on how to complete the W-4 as a non-resident alien. If you're receiving non-compensatory scholarship and fellowship income, and you're not receiving personal services income from the same withholding agent, then you would probably use either Form W-8 BEN or a Form W-4, depending on what the withholding agent is saying. And then finally, if you're claiming only a foreign status or tax treaty benefits with respect to income that is not compensation for personal services, then you would use Form W-8-BEN. So now that we get into the meat of this form, there are 4 parts. In part 1, we're going to identify the beneficial owner. So who is earning this money, basically. In part 2, we're going to identify and give some information on the tax treaty withholding exemption. Part 3 is going to be the certification under penalties of perjury that the beneficial owner would sign. And then part 4 is the withholding agent acceptance and certification. So let's go to part 1. We've got a situation where our hero John Doe is visiting from Canada. He is a doctor and he's here on a specific type of visa. So we're going to walk through this. So John Doe, his taxpayer ID number, which could be a social security number, but most likely would be a individual taxpayer ID number, or ITIN. If he has a foreign tax ID number, he would enter that in. So Canadians would use your social insurance number, which is very similar to a social security number. Your permanent resident address goes into line 4. So this is where you live at home. In this case, 1000 Main Street, somewhere in Canada. And then line 5 would be the United States address. The IRS instructions are very specific that you can't use a PO box or another address that is used only for mailing purposes. So you can use like an office address, but you wouldn't be able to use one of those shareable offices with the common mailbox. You can't use like a mail routing service. It has to be a physical address. So citizens of Canada are not required to complete lines 7A and 7B, but I put this information anyway. So our hero is here on a O1 visa. So that's for certain individuals with extraordinary talents and skills. For example, in a prior life, when I was a financial planner, I had a client who was an infectious disease doctor, and he specialized in diseases of the liver. So he was from France, and he was here on an O1 visa. So we kind of worked through very similar circumstances such as this. Basically, the type of visa may matter a little bit, but realistically, it's going to depend on the terms of your tax treaty. So for the purpose of this form, we're only putting in the visa type. In this case, it's an O1 visa. Although he doesn't have to put this information because he's a citizen of Canada or Mexico, we're going to put his passport country and passport number in here. Date of entry into the United States, current non-immigrant status. I put doctor, but that's kind of like a doctor performing, research. I mean, another type of status could be like temporary worker, could be student, visiting professor, so on and so forth. And then in 9B, that would be the date that the non-immigrant status expires. So if you're a foreign student, a trainee, a professor, or a researcher, you would check the box on line 10. And there are additional statements that you would need to attach based on your circumstances. So specifically, IRS Publication 519, Appendix A and Appendix B break down the type of statements that you would attach here. IRS Publication 519 is the U.S. guide for aliens. So in part 2, we're going to provide a little bit more information about the income that is being exempted and exactly how. So in line 11, Line 11A, we're going to put a description of personal services. So in this case, Dr. Doe is performing medical research for blankety blank medical school and research center. He expects to be paid $150,000 that he believes is completely exempt from U.S. tax based on the U.S.-Canada tax treaty under Article 14 that talks specifically about independent personal services. So it could be Article 14, it could be Article 15. Really, it depends on the treaty that's in place, and then whether or not he's operating as an independent contractor or as an employee. So in this case, he's making his case that he's an independent contractor. That's the article that he's citing. He reasonably believes that his entire compensation is exempt from this tax because he's already going to be paying tax to Canada, and there's a reciprocity there. And then he enters Canada. So line 13 is primarily for people receiving scholarship or fellowship income, teaching assistants, grad assistants, students, things of that nature that also had to complete line 12 because they've got actual compensation. Again, so John Doe as a visiting doctor would not enter this information here, but let's imagine that he was here doing some work. We outlined some stuff up in line 12, and he's also got a $10,000 fellowship income that he's declaring, and it's coming from the same XYZ medical school center. So it's a $10,000 stipend that he believes is tax-free. In this case, he would be citing the U.S.-Canada tax treaty, and he's citing Article 21, which happens to be exempt organizations. So he's putting that in there. This may or may not be correct. We don't know. We're just kind of walking through this. So, when you complete this form, or if you are the withholding agent reviewing this form, you do need to be familiar enough with the tax treaty to make sure that this is a reasonable claim. Otherwise, the IRS will reject it, and there can be certain stipulations based on, the conditions under which the IRS does not accept the claim. So be sure that you're familiar with the tax treaty itself, but then also the individual articles that you would be basing the exemption on. Generally speaking, most colleges probably have a little bit more experience in this. Unless you are following in the footsteps of someone that's successfully done this in the past and you know exactly what you're doing, you may need to work with a tax professional that focuses on tax coordination between the U.S. and whatever country you have a treaty with. And then in line 13D, we're going to put the total income. John Doe thinks that all of his income is exempt from withholding, so he's going to put the $10,000 here. So line 14 is space for you to cite enough facts to justify your exemption that you're claiming. So again, you're going to need to be familiar enough with the tax treaty and what it says so that you can incorporate your facts on the ground with what is justified under the treaty. So I just put a blank example here. There is no specific guidance in the IRS form instructions, although you might be able to find additional information either within the treaty or in IRS publication 519. Part 3 is a certification, again, under penalties of perjury, that the beneficial owner, the person that's earning the money, is the beneficial owner of this income or is authorized to sign on the owner's behalf, that they are not a U.S. person, meaning that they're not a U.S. resident, a U.S. citizen, they're not they are a non-resident alien from that other country. And then the beneficial owner is a resident of the treaty country that's listed on either line 12A or 12B or 13B within the meaning of that income tax treaty. If that's the case, you would sign all of this and date it here, and then you're authorizing the withholding agent to send this to the IRS on your behalf. And in part 4, the withholding agent, in this case, let's say that James Smith works for XYZ Hospital. He's going to put the hospital's employer ID number as well as the address, city, state, and zip code, and a telephone number. He's going to sign this, and he has a limited period of time to actually file. So it does say in the form instructions, it gives very specific guidance to withholding agents. So a withholding agent, so the form instructions also contain additional information about, common errors and things of that nature. So the withholding agent responsibilities, basically, as the withholding agent, you would have 3 copies of this form. One is going to remain with you. One is going to remain with the beneficial owner, and then you're going to forward 1 copy to the IRS office, I believe in Philadelphia, Pennsylvania, right here. You have to wait at least 10 days before you actually don't withhold anything. It is retroactive, the exemption, but you wait 10 days for the IRS to weigh in and contact you if there's something wrong or if they disagree with the form. So the IRS does need to weigh in. If after 10 days you have not heard from the IRS, then you should be able to assume that this is accepted and that you can avoid withholding. And then obviously you have to not accept the form if you know that some of these facts are incorrect or if the treaty is incorrect. So the withholding agent has a responsibility in terms of due diligence to make sure that this is acceptable information. So there are a lot of nuances in this form, particularly based on the taxpayer circumstances, the type of income that is being earned and declared, the tax treaty between the United States and home country, whatever that may be. So we do cover a little bit more information, including some filing considerations in our article. So you can find that on teachmepersonalfinance.com. If you type in IRS form 8233, it'll take you right to that form. We'll also put links in the show notes to some of the other forms that we mentioned here. So if you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's something that you'd like to see updated in an upcoming video, please hit me up in the comment section. Thank you very much and have a great day.